Hey, welcome back to Lunch at the Market. I hope your day is absolutely darn tootin' terrific. So today, as you can see, we're sporting the blue and the white. Why? Well, for two reasons. One, it's Memorial Day on Monday, and we need to remember why we all get a day off. Yes, it's a national holiday, but there are a lot of men and women who died to give us that national holiday, and so the memorial, of course, is in memorial of all those who given their life for their freedom in defense of our country and many other countries around the world. So thank you so much to our men and women of the service. If you're a service man or woman watching this video, we really appreciate you and want to say thank you very much. Second, Mark Haynes every Friday used to wear a American flag tie. And so in honor of Mark Haynes, we will salute you. And we'll try to do a better job with our patriotism. Obviously, our country is a great one, and we should all remember how many people gave their lives to make it that way. All right, but it wouldn't be Lunch Out the Market if we didn't talk about a trade. And today there are some good ones. First, Ensco, symbol ESV. We're along the September 50-55 in the money call spread. The stock is below the top strike on the 55 strike. And today it was down over 1%, close to being down $1. So it's better to be lucky than good sometimes, right? Around the lows of the days, we sold the September 150, 145 put spreads against our long call position for $1.38. Yeah, that's right. $1.38 is what we got for selling those put spreads out to September. Now, what's really terrific about this, first of all, our in-the-money call spreads only cost us about $2.90, so we get to subtract that $1.38 from that. We actually sold 1.5 times as many put spreads against, so 1.5 put spreads we sold for every long call spread, which actually reduced our break-even point, get this, to 79 cents. That's right. As long as ESV is at $50.79, we're completely break-even on the trade, no harm, no foul. That's a pretty low bar to set. Now, why the level? Why did we pick the levels that we did? So the 150-day moving average is pretty much right here. The 150-day moving average is about $53 and about 90 cents or so. And the stock touched that 150-day moving average today. It actually did that a couple days ago. Each time it's bounced off the 150-day moving average, so we placed that bet again today. But we didn't sell a higher strike. Why? Because if it breaks the 150-day moving average, what's the next line of support? If you go back and you look at a chart, a 6-month chart with January and February in there, you'll see the stock pretty much banged its head on that $50.65. At one point in February, it broke through that down to $50 about 10 cents before trading back up. Both times, that $50.60 level held. The stock traded back up. At one point, 56 was resistance. Traded back down. Tested $50.65 again. Bounced again up to $58 this time. Okay, so if you go back and you look at a year in the chart, there's actually a really nice uptrend. And so the 150-day moving average is coming in view, right? The bottom of that, what used to be support, right? A few days ago it was broken. It broke through that channel. Now it's been resistance. It's already actually tested that line of resistance once, traded back down to the 150-day moving average, bounced back up to hit resistance, and then now is testing again that 150-day moving average. So far so good. The support levels look like they're holding extremely well. That's why we chose that 50 level. It's below that $50.60, which the stock has held at several times before. Again, in January and February, pull up a 6-month chart and you can see those. We'll see if it can retake the upper end of that the range. Right now, the bottom of that channel that was support is now resistance. We'll see how it acts, but so far ESV has traded extremely well technically, and again, we told you why we like the drillers. I think it was yesterday we actually told you about that. So selling the put spreads is a great way to reduce our cost basis on our long calls. And speaking of selling a put spread to reduce the cost basis on a long call, that's actually called a double vertical or a vertical spread, right? It's vertical, obviously, because all of the strikes line up in a vertical pattern, and then it's spread because you have a long call spread and a short put spread, right, on the same stock for the same expiration month. So taking a look at September again, Molycorp, ticker symbol MCP. Now this trade is not for the faint of heart. If you don't like wild swinging trades, you need to lay off of Molycorp. But if you got like a little nitro in your gasoline, then you take a look at Molycorp. What we did is we bought the 65.60 call spread. Right now it's out of the money, completely out of the money. 65.70 call spread and sold the 55.50 put spread against us. It cost 20 cents to put on this trade. So your break even, of course, is Molycorp at $65.20. That's not a big move. In fact, I think it's only about $2.20 from where the stock trades at right now to get to break even. So obviously we're playing this thing for some upside. We don't have tremendous risk in the position until Molycorp falls about $8 a share. It's a better than 10% move to the downside. So there's price targets all over the place for this stock, 80s, 90s, 100s. Most people's price target is, above at least $70, right? Above where the stock trades. Stock trades around $63 right now. But it's you get your upside for free. You sell the put spread against it. It's all in equal amounts, right? We're using the September expiration because it gives us time to be right. That allows us to kind of wait out the volatility. Also, it can be adjusted. There's two spreads, right? So there's a short put here and a short call here. Either of those could be bought back depending on where the stock goes. If it plummets, you could buy back the short side of the call and just have naked calls in there. If it skyrockets, then you could also buy back the short put, and then you eliminate your downside, right? Then your only risk in the trade is the 20 cents that you spent to put it on. So it depends on how much you had to pay to buy back those, right? Let's say you had to pay 40 cents. That would make the trade 60 cents. So your break even would be at $65.60. Anything above that, all the way up to 70, would be profit. And then, of course, you have a put on the downside, so if it reversed back the other way. I mean, there's all kinds of ways that you could trade that, right? The goal of this is to give you guys ideas and to tell you what we're doing and then let you trade it for yourself. All right, there will be frequent trade updates on this Molycorp double vertical, this vertical spread between here and September. So be sure to tune in to Lunch at the Market. Every day, you should always be tuning in to Lunch at the Market, but especially if you have a trade on. We always try to update you on the trades, especially if we have to do trade repair, which some people like to be mean and say that that means that we're losing money. Look, folks, it's just temporary. Take, for instance, CRE. Wasn't that a nightmare? That's right. We took off the CRE 37.5, 32.5 put spreads today for about 18 cents. That's right, buddy. It's usually not the timing. It's usually not the stock that we pick, it's the timing. And so as long as we've done our research, and the same should work for you at home, as long as you've done your research, eventually that means that things go your way. So CRE, thank you. It's great to see CRE be our biggest winner of the day today. Stock traded around $43 a share. We bought back those 37.5, 32.5 put spreads for about 18 cents, up quite a bit, as you might imagine, from where we sold them many months ago. So we'll see if we can't be on this CRE train for a little longer. It's been a fun ride. Fun's kind of an understatement. So sometimes you need some time to be right on a trade, so stick with it, especially if you've done your homework. Do your homework. Don't ever trade without doing your homework. Never buy something blind or because somebody on CNBC said it looked good or sounded good or was good or any of that. Always do your own homework. Have some numbers. Know your levels in the stock. Don't forget to look at your charts before. You'd hate to buy a stock in a terrible downdraft just because of one day's trading action. All right, thanks for joining us on Lunch at the Market. Have a safe and happy Memorial Day. And Mark Haynes, we miss you. Thanks so much for all you did.